Good morning. I'd like to extend a warm welcome to those of you who have joined us. Thank you for taking the time to meet with us today. My name is Dan Davio. I have served as CEO of Canaccord Genuity Group since 2015 and was appointed chairman in 2024, and I have the privilege of chairing today's meeting. Joining me on today's webcast are our Executive Vice President and Chief Financial Officer, Nadine Ahn, and our Senior Vice President of Legal Affairs, General Counsel, and Corporate Secretary, Darcy Doherty. I'd also like to welcome additional members of our executive leadership team and our current directors who are joining us from various locations in North America, the UK, and Crown Dependencies, and Australia. We are once again holding this year's meeting online to promote broader participation and provide the option for shareholders to vote and submit questions regardless of their location. Before we get started, a couple of procedural matters. Many shareholders submitted their votes before the meeting. Thank you. If you voted in advance and you do not wish to change your vote, no further action is required. A very small number of you have decided to vote at the meeting. Voting instructions were made available in the information that shareholders received as part of the meeting materials, and these instructions have also been available on SEDAR+. If you are a registered shareholder or proxy holder, you would have received your control number or username with your meeting materials by mail or email. This gives you the ability to vote and submit questions as shown on the meeting website. If you have followed the instructions in the meeting materials, then you will have logged into this meeting with your control number as your username and the password, CANACCORD 2026, all in one word, using lowercase letters. If you are not a registered shareholder or proxy holder, then you have logged into this meeting as a guest. Guests will be able to follow the proceedings, but will only be able to submit questions after the end of the formal business of the meeting. Once the discussion and all items of the business has concluded, I will pause briefly to allow sufficient time to enter your votes, and then I will declare the voting closed on all resolutions. We will conduct all votes on the matters before us as a poll. On a poll, every shareholder entitled to vote on the matter has one vote in respect of each share entitled to be voted on the matter and held by that shareholder. The poll will be open for all resolutions at the same time. This will allow you to vote on each resolution immediately or wait until the conclusion of the discussion on each resolution prior to casting your vote. Later today, the results of this meeting will be made available on the company's investor relations website and on SEDAR+. There will be an opportunity for registered shareholders and proxy holders to ask questions on each resolution in turn. Please ensure that the questions or comments are related to the matters currently before the meeting. When submitting a question, please provide your name and indicate clearly whether you are a shareholder or proxy holder. To submit a question, use the questions icon on the virtual meeting platform. We will answer questions related to each motion at the appropriate time in the meeting. We will also be pleased to address general questions after the presentations have concluded. If we receive several questions on the same topic, we will group these questions together and provide a response. We will respond to as many questions as possible during this meeting. If we are not able to address your question here, we will respond to you directly after the meeting if you provide an email address or a telephone number where you can be reached. During the meeting, you may experience pauses from time to time as we review messages, so please bear with us. On behalf of those speaking today, I note that all comments may include forward-looking statements. I encourage you to take a moment to review the detail regarding forward-looking statements and non-IFRS measures that have been provided as part of today's presentation and also available in our financial reports. Our agenda for today's meeting will begin with the submission of the company's fiscal 2026 financial statements, followed by the election of directors, the appointment of auditors, the advisory resolution on our executive compensation approach as disclosed in our circular. Following the official business of today's meeting, I will share a few remarks about our business and provide a brief overview of our corporate strategy and outlook. As I have previously mentioned, we will be pleased to take general questions after the presentations have concluded. And now for the official business of today's meeting. The meeting will please come to order. I appoint Jenny Karam, an officer of CompuShare Investor Services, to be the scrutineer of the meeting. I have received CompuShare's report as to the share representation at today's meeting, and there is a quorum present. So I now declare this meeting to be regularly called and properly constituted for the transaction of business. I declare the polls open on all resolutions. The first item of business is the election of the company's directors to serve until the next annual general meeting or until their successors are appointed. First, I propose a motion that the company set the number of directors at 6. Darcy, have we received any questions or comments online?
We have not, Chair. Thank you.
If there are no questions, please cast your votes on item 1 right now before we move on to item 2. I declare the meeting open for nominations and advise that management has nominated the following individuals, all of whom have consented to their election. But biographies for each of our nominated directors has been provided in the Management Information Circular. John Albright, our lead independent director, Michael Auerbach, myself, Dan Davio, Shannon Yusi, Terry Lyons, and Cindy Tripp. Darcy, have we received any further nominations or questions or comments online?
We have not, Chair. Thank you.
Since there are no further nominations and no questions, please cast your votes for each of the director nominees. It is now in order to proceed with the appointment of auditors. I propose a motion to appoint Ernst & Young, LLP, Chartered Professional Accountants, as auditors of the company for the next ensuing year and authorize the directors to fix their remuneration. Please vote now. Darcy, have we received any further nominations or any questions or comments online?
We have not, Chair. Thank you.
Our final item of business is an advisory resolution on the company's executive compensation approach. The board considers this to be an important part of our shareholder engagement process and commits to reviewing the results of the vote when considering further decisions related to executive compensation. Darcy, have we received any questions or comments online?
No, we have not, Chair. Thank you.
Please vote now. That concludes the official business portion of our fiscal 2026 annual general meeting. I will pause for a moment while the voting concludes. Thank you. I now declare voting on all matters closed. All motions have been passed, and the following directors have been elected as directors of the company to serve until the next annual general meeting or until their successors are appointed. Michael Auerbach, John Albright, myself, Dan Davio, Shannon Yusi, Terry Lyons, and Cindy Tripp. I will now declare the formal meeting concluded.
Thank you once again to my fellow shareholders for your continued trust in our organization. Fiscal 2026 demonstrated the strength of our strategy, the resilience of our operating model, and the value of our partnership culture. The year began against an uncertain backdrop shaped by shifting trade policy, evolving interest rate expectations, and geopolitical developments. Although conditions remained volatile, the environment became progressively more constructive as the year unfolded. Throughout this period, we remained focused on delivering market-leading advice and execution for our clients, investing selectively in our platform, managing risk prudently, and allocating capital with a long-term perspective. Full-year revenue increased 20% to more than $2 billion. Just as importantly, our revenue mix was far more balanced than the last time we achieved this level. Wealth management contributed 50% of annual revenue compared with prior periods when capital markets generated roughly two-thirds of firm-wide revenue. This diversification underscores the strength of our wealth management platform and highlights the meaningful upside potential in capital markets as activity continues to recover. While improved market conditions supported higher activity levels, disciplined execution and stronger operating leverage drove significantly greater profitability. Adjusted net income to common shareholders increased 115%, accompanied by meaningful pre-tax margin expansion. Throughout fiscal 2026, we continued to invest in and scale our global wealth management platform. We achieved this through acquisitions and targeted recruitment to enhance our capabilities, allowing us to do more for our clients. These efforts contributed to a record performance. Revenue increased 26% year-over-year. Adjusted pre-tax net income increased 40%, and client assets grew 23%, with new records in each of our geographies. Client asset growth was supported by market appreciation, positive net inflows, and deeper client engagement. Each region contributed through distinct and complementary growth drivers. In the UK and Crown dependencies, we advanced our organic growth priorities, building on prior acquisitions and talent investments to enhance our financial planning and distribution capabilities. In Canada, increased client activity and greater advisor collaboration supported stronger performance as we continued to grow fee-based revenue while supporting increased transaction volumes. In Australia, strong underlying growth was complemented by the transformative Wilsons Advisory acquisition, which added meaningful scale, expanded our capabilities, and established a truly national footprint. Our capital markets division also delivered substantially stronger results, reflecting the investments we've made in our people and our platform, and the ability of our teams to move decisively as opportunities emerged. Revenue increased 26% year-over-year, while the division's pre-tax net income contribution more than tripled, demonstrating significantly improved operating leverage. Investment banking revenue increased 93% year-over-year and accounted for 39% of global capital markets revenue. Growth was driven by significantly higher corporate financing activity in all regions, with particularly stronger contributions from Canada and Australia, where we maintain leading metals and mining franchises. While activity strengthened across our core focus sectors, metals and mining was a notable driver of growth, supported by constructive market conditions and powerful long-term themes such as electrification, energy transition infrastructure, battery metals, and supply chain security. Advisory revenue increased to its highest level since fiscal 2022 and represented 29% of total capital markets revenue. Our U.S. business led this performance, benefiting from strong technology activity, and we improved contributions from several other sectors, including metals and mining. We also continued to strengthen the platform through targeted strategic initiatives. These actions included the divestiture of our U.S. wholesale market-making business and the acquisition of CRC IB, which expands our capabilities in renewable energy and energy transition advisory. Together, these transactions further sharpen our business mix, increase our focus on higher value, advice-driven offerings, and position us to capture growth in attractive long-term markets. During the fiscal year, we also resolved the previously disclosed regulatory enforcement matter related to non-core trading operations in our U.S. capital markets business. While these matters did not involve any other U.S. business or any CG operations in other geographies, resolving them required significant effort from teams across the organization, and the related penalties and remediation of costs affected profitability in our U.S. business during the year. Addressing these issues was just part of our broader multi-year effort to strengthen our compliance framework, controls, and oversight capabilities. The framework today is stronger, more consistent, and better positioned for the future, reflecting the expertise, persistence, and commitment of the teams who led this work. Our business is built around a clear purpose, helping growth companies and investors access the advice, capital, and relationships they need to achieve their ambitions. The markets we serve support innovation, employment, and economic growth, and yet they are often underserved by traditional banking channels. I am proud of the work our more than 3,000 colleagues do every day to support their success, and grateful for their unwavering dedication. At the core of our performance is our partnership culture, which supports a long-term approach to serving clients, managing risk, and creating shareholder value. During fiscal 2026, our limited partnership increased its ownership incrementally. Following the third round of subscriptions by new and existing employees in June, our ownership increased to 15.3% on an as-converted basis. This further strengthens alignment between our employees and our shareholders and encourages decisions that support long-term value creation. As we entered fiscal 2027, we carried forward considerable momentum from a record fiscal 2026. Yesterday evening, we disclosed a strong first quarter result with meaningfully higher year-over-year contributions from both wealth management and capital markets. Performance was supported by record client assets, stronger capital markets activity across our core advisory and financing verticals, and improved operating leverage. Earnings growth substantially outpaced revenue growth, and we are comfortably on track to achieve our target operating margin improvement for the current fiscal year. Looking ahead, our priorities remain straightforward. Execute for our clients, deepen partnerships, continue to strengthen our risk and compliance framework, and allocate capital thoughtfully. We are also investing in technology, including artificial intelligence, to improve how we serve clients and operate our business. Our focus is practical, increasing efficiency, enhancing the speed and quality of our insights, and strengthening controls and risk management. We are approaching AI responsibly, with strong governance, appropriate data protections, and meaningful human oversight. Most importantly, we see AI as a tool to strengthen the capabilities of our people and give them more time to focus on the trusted client relationships that define our business. While the timing and direction of market activity remains difficult to predict, our stronger platform, improved operating leverage, and continued expense discipline position us well to respond as opportunities emerge. We also remain committed to evaluating strategic opportunities that can maximize long-term value for our fellow shareholders while maintaining continuity and the highest standards for service for our clients. It is my privilege to serve as your chairman. I'm grateful for the confidence of our shareholders, the partnership of our global operating committee, and the guidance of our board as we continue to advance these priorities. And with that, we would be pleased to take your questions.
Thank you, Mr. Davio. We will proceed now to the question period.
Mr. Chairman, there are no questions from the floor from shareholders or guests at this time.
Okay, well, thank you all for joining, and that'll conclude today's meeting. Thank you.